Hello viewers, we'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. In this video, we'll be going over the day-by-day probability model, how we find the models, and we'll go over the day-by-day forecast for gold miners. So back to the technical analysis. Today we're down 79 basis points on the 1 hour chart. We are very close to oversold RSI. We start to see a convergence in play. And on the 4 hour chart, we are in negative MACD. And on the daily chart, if we expand out, we are approaching to negative MACD. However, we are finding support on the 50-day moving average, this yellow line. And we could see a larger motion in play. One could say we are making higher lows if we extend out to last year in November. This trend line is still intact, and we may see a possible resistance if we were to reverse and head up higher. The next resistance will be the 18-day and 9-day moving averages, which average around the price of $41. So that is our first resistance. And for support, if we do head down lower, I do see the next possible support around the price of $39.70. We see a past support that dated back to mid-December of last year, and that coincides with the 100-day moving average and 150-day moving average. So that is our next immediate support. And if we were to move down lower, that price movement is roughly around 3.9% to the downside, and to the upside is around 1.5% to the upside. So back to the day-by-day probability model. This model is now available in the link below, so do check it out. So as the day progresses, we see a slight favor to the downside. We see overall chance to the downside, no chances of gold miners heading higher, in favor of 0 to 4% down, or 4% to 8% down. So let's head back to the day-by-day forecast for gold miners. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to October 5th to December 30th, 2010. So let me point out why these two charts are similar. So what we have here on the current trend, we start off below the middle Bollinger Band, averaging below there. And then next we start to see averaging above the upper Bollinger Band at this sequence. Next we see a slight dip touching the bottom Bollinger Band right near the end. So we have those points there. In the trend in question, we also have the trend start off at the bottom Bollinger Band. Next we average above the middle Bollinger Band for several weeks. And after that we also see a dip and average below the middle Bollinger Band as well. So what we have is 1, 2, 3 points. We also have 1, 2, 3 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was October 5th to December 30th, 2010. Back then, Gold Miners Jr. was down roughly around, I would say, 7.5% or around 7%. So gold miners may continue to head down further, and that also coincides with this extreme case between negative 4% to 8% down. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.